Well, the macro backdrop in terms of global growth, interest rates and inflation rates is, of course, in transition. Looking into the second half of the year and also into 25, we are facing a global synchronized downturn led by the US, of course, and yield curves normalizing again. So a bit a less favorable environment for banks in general. But, that's a normal cyclical downturn. And the central banks have elevated interest rate levels to levels where they have plenty of room to ease due to a slowdown, or in the case of any kind of defaults or other casualties or event risks in the markets. And, banks are well equipped to deal with this type of environment. It's a normal cyclical downturn. And then on the other side, of course, UBS being a very strongly global leading wealth manager can benefit from, the more difficult environment in geopolitics. There is growing demand for safe haven assets. We see it in the Swiss franc, and then also for safe haven, high quality counterparts. So I would not be surprised to see ongoing strong figures in terms of assets under management in the institutional business, and particularly in the private wealth business in the second half of the year and then next year. So UBS in that sense is well positioned, and the challenges are all the same for all the banking players.
Yeah, it's very interesting how that this company is really just trudging along and really doing well, actually, considering the context as well. They also make note of how it's enabled them, the execution of the next critical phase in the migration of unlocking further costs, capital funding and tax benefits. Speaking about that merger, how important was it to show that the integration process here of Credit Suisse is moving speedily ahead? How important was it for this entity?
It's absolutely key. And I think the leadership is highly aware of it and therefore has really pushed hard to accelerate on the integration. And I think they're absolutely right to do this. And then we have also to be realistic. The stock price expects this. Basically, investors expect flawless execution. If there would be some non-delivery on such key initiatives in the topic of integration, that would not be very beneficial for the stock price, of course, and for the leadership. So they have to be flawlessly executing this integration. They know that, and they do it. And so far, they have delivered. And I have basically no doubts that this will be on the existing trajectory, and the leadership is delivering on the integration plan and also on the positioning of the bank. However, the big challenge, and I think that's the key factor and the key driver, whether UBS can medium term really close up to global peers, especially in the US in terms of valuations and performance, is really the Swiss regulatory and supervisory framework, which needs to apply lessons learned from the Credit Suisse collapse that was entirely predictable and entirely self-inflicted. It cannot be that Swiss authorities again are unprepared, getting unprepared in such a situation again. And next time, of course, should UBS have a problem, there is no other Swiss bank because they are the only one left. So therefore, it's very important to have the focus on the results of the Parliamentary Commission of Inquiry and the respective recommendations for adjustments in the regulatory framework to lift it up to a global playing field of New York, London, and Frankfurt. And there will be a lot of political discussions this fall about additional capital requirements and other measures to make sure that UBS is a safe counterpart in a Swiss regulatory framework.